So good afternoon, everyone. My name is Bettina Prato. I'm the Senior Coordinator of the SAFIN network. I think quite a few of you are SAFIN network partners, but I also see some new faces, so some guests. So it's a pleasure to see you. I will just say welcome, but substantively, I will hand over the task of sharing this webinar or this call to Aman Khanna, who is one of the partners in the network, as the CEO of Setuka. Today we are going to have three speakers with us. Bala Reddy, who is the CEO and co-founder of Our Food, a company that provides low-cost processing facilities at the farm level, connecting farmers and bulk buyers using new age or high-tech solutions and logistics. Then we have Emmanuel Murray, fund manager of Caspian Leap for Agriculture Fund, which supports early stage companies at seed stage and pre-series A in food and agriculture, as well as the group chief finance officer at Caspian, which has primary responsibility for managing finance and accounting, fundraising, financial control, and risk management for the group. So what we are going to be exploring today in the next hour is the journey, the financial journey from early stage to growth stage of agri-SMEs, looked at from the perspective of one specific SME or food, as well as an investor, Caspian and particularly Caspian Leap for Agriculture Fund. We will have quite a bit of time in the second part of the call for questions, but at the beginning we will focus on learning about these two specific actors and their journey. So Aman, thank you for the opportunity to organize this. It was your initiative, a very, very good and welcome idea. And I really look forward to hearing from you and to hearing from our guest presenters today. Over to you, Aman.
Great. Thank you so much, Bettina. Thank you for this opportunity. It's always a pleasure to engage with the network, and it's been a while since we've been partners, and it's furthers the mission of creating the bridge that Setuka was founded for. Setuka, as you know, if I'll give a quick introduction, we were founded out of the realization that capital allocation in the world is skewed. There is a need to create a bridge between social enterprises, financial institutions, and capital providers. We do three main things, between $5 to $50 million transactions for fund managers or agri enterprises for them to access catalytic long-term blended finance. We advise DFIs and impact investors on deploying capital in emerging and frontier markets with IFC, World Bank, and the others. And we do a lot of South-South knowledge sharing, study tours and exchanges, which between West African countries, East Africa, like Senegal, Ethiopia, Ghana, Cote d'Ivoire, we have done some study tours. It's always great to be part of this dissemination of learnings and knowledge. I've known both the enterprises that you see and the leaders of on this call, Caspian, Impact, and Our Food. As we had discussed in one of our introductory presentations, a very important role of SAFIN that we are very glad to facilitate is showcase successful models for in terms of raising and deploying capital in the agribusiness space, and here are two different models. One is an agribusiness, early stage agribusiness focused fund, and an agribusiness itself. The founders and senior management of whom are here on the call. I've known Bala, who founded Our Food for a couple of years now, when he reached out to me after, for support in expansion and fundraising. And, it was a surprise for me for such a strong business, which is really decentralizing processing into the hinterland, for them to be at a stage where they needed external support. I told them, you don't even need me. Your model is so good that you should just have incoming inquiries. So, but that's how it is. That's how where we realize that we need people, we need entities like us to facilitate, create that bridge, and enable an understanding, an nuanced understanding of what deployment of capital and for smallholder benefit really entails, how these models work, and there is a need to create that bridge. And that's how we started working together, Bala and I. Caspian team, I've been very impressed with the track record. That's a fund management team that has done many, pioneering investments in India, many funds. Now the fund that they're going to talk about more specifically, and their learnings in raising and deploying capital is one that is focused on early stage agribusinesses. I believe Caspian has really started a movement which can and potentially should get replicated in many other emerging and frontier markets, in terms of being able to create a compelling proposition for investors to say, hey, we know what you need in terms of your theme and thesis, and we kind of can deploy it in a manner which is most aligned to your thesis and creates impact. Of course, this is a very nascent area, and nobody's done it perfectly yet, but I think what we hear today from these two companies hopefully will be of value in terms of generating that discussion, and the challenges and the learnings that both these entities have had by virtue of their experiences will create the right discussion and the right connects to disseminate this further, particularly create a deeper understanding of what smallholder finance really entails and what are the gaps. We'll get very much more specific than the high level points I'm making at this point, but I let that happen during and after the presentations. We'll have Bala from Our Food present their model and their challenges and learnings first for the first about 15 minutes. Then the Caspian team will present, and then we'll have a 30-minute Q&A. Which between Bettina and I will facilitate. So I'll pause here and hand over to Bala to start the discussion. Bala, over to you. I'm projecting your presentation. Please go ahead. Bala, have we lost you? You're here. You're on mute, Bala.
I'm unmuting.
Yeah.
Thanks a lot, Aman. Thanks a lot, Bettina. Thanks a lot for the opportunity. Yeah, it's great to know about the network and how you are bridging the gap between the SMEs and the finance requirements of the SMEs. Thanks a lot once again. Yeah, so I am the founder of Our Food. So at Our Food, we are decentralizing the food processing industry and bringing the processing capabilities to the farm level, so that the farmers can do the processing themselves. So generally in Indian food supply chain, the biggest problem is from the farmer to the consumer, there are so many middlemen, and the farmer is not reaching out to the end consumer. And the farmer is not selling the produce the end consumer wants. That is, there is no value addition after the post harvest, and there are so many post harvest losses. This is all happening because the existing processing units are very high capex facilities which are not accessible to the normal farmer. They are available only to the rich people, and they are very centralized equipment available. So because of this, farmer is not doing the processing, and valuation is absolutely minimal at farm level, because of which there are so many post-harvest losses. So the solution that we have provided is we have designed low-cost processing equipment, which will be installed at the farm place only, so that a farmer can do the processing themselves on the farm. It is executed under farmer franchisee model. So wherein a farmer franchisee is a person with 1 to 2 acres of land, who is in the age group of 25 to 35, and who can invest a minimum sum to construct a 1,000 square feet shed according to the specifications given by us. So we, after they construct the shed, we provide a loan so that they can install this machinery, and this machinery is completely designed fabricated and manufactured by us. So we will install this machinery, and we will provide the uh, hands-on training for the farmers to do the processing there. And whatever material that is processed in that farmer franchisee, we will only pick up and we sell it to the bulk buyers. So this is our business model. Yeah, Aman, can you go to this? Yeah, so this is the model wherein you can see our small shed, which is constructed by the local unemployed youth. And there is a small dal mill, that is the pulses mill, where the dehusking and splitting operations happen. They produce tur dal, which is one of the major agri commodity consumed by Indian consumers. So we established these kind of units, and these are manufactured at our place only. Right now, we are into around 12 products which are majorly consumed by Indian consumers. Pulses, rice, millets, groundnut, chili, turmeric, uh, and other spices as well, jeera, cumin, these kind of things. So the way we work is, yeah, the next slide. Yeah, so we identify these unemployed youth who have a minimum education of +2 or any undergraduation. So we identify these people, and if they are able to invest a small sum in constructing a small shed, 1,000 square feet shed, according to the specifications provided by us. So we take their KYC documents, that is their basic documents like PAN card and Aadhaar card. So, and we assess their credit worthiness. And if they satisfy our requirements, we give them the farmer franchisee provision. So after that, they are supposed to construct the shed. And after the shed construction is done, so we provide them a loan of 4 lakh rupees. That comes to around $6,000. So in this, the machinery cost that we provide, that will be around $3,000, and the remaining is for the shed roofing material and also working capital. So we have designed these low-cost material processing units, and we are manufacturing them, and we are providing them to the farmer franchises. And after the loan is given and the machinery is delivered, we provide them hands-on training for doing the processing and to achieve the best quality output. After the training is given, they do the processing, and whatever material that is processed, and we pick up that material and sell it to the Kirana general stores. So this is the business model. Yeah. So in our journey, yeah, Aman, if you go to the next slide, yeah. Yeah, so in 2016, we ideated this concept, and in 2017 March, we manufactured our first pulses milling unit in March 2017. But it took us more than 6 months of time to achieve the best quality output that is on par with the high capex mill. So after that, we diversified into other machinery as well, like chili powder, turmeric powder, rice, groundnut, millets. And then we wanted to take up this concept under the farmer franchisee model. So we wanted to take this to the farm level by selecting unemployed rural youth. So we initially we started working with the NGOs and the government organizations who are already doing some groundwork on the village at the village level. So we identified some people, and we started giving this machinery to them. So the major bottleneck that we faced while doing this, we assumed that the local banks will give the loans. But the biggest problem in India is for any loan, all the bankers require mortgage. So that mortgage cannot be given in the form of agriculture land. So what our farmer franchises have, they have agriculture land, and this processing unit comes under MSME sector in India, that is micro, small and medium enterprises. Because of this requirement, they can't take agriculture land as the mortgage. So they have to provide only non-agriculture land, which is not available with all our farmer franchises, because most of these people are very small and marginal people who are unemployed and who can't, who doesn't have that much properties, non-agriculture lands to provide it as the mortgage. So during the 18-19 financial year, we were majorly, we got into a clear problem where our innovation is not taking shape because of this bottleneck created by the banking system. So what we have done was, from our own books, we got the machinery manufactured and we provided this machinery to the farmer franchisees. And we have taken this machinery to them and started convincing them to do the processing and all that. And while the processing is happening, so we have taken many government officials and also the bankers to come and visit and firsthand experience the processing happening there. And after a lot of persuasions, many government officials came and visited, and many bankers visited. And after almost 1.5 years' time, during the 2019, later part of 2019, slowly the bankers started changing their stand. So they have seen this processing happening firsthand, and transactions happening, and in the accounts of the farmer franchises, billing happening and money being credited into their account. So they have seen all this, and slowly it changed. And one of the early banker who accepted our proposition is from the Gramina Bank sector, that is in Andhra Pradesh state of India. Andhra Pragati Gramina Bank, which is headquartered in Rayalaseema region of Andhra Pradesh state in Kadapa. So that chairman happened to visit our farmer franchisee unit in Anantapur district in Rayalaseema region, which happened accidentally it happened. So he was conducting some field visit and visiting some processing unit somewhere in Anantapur district. On the way, he happened to see our unit and he went inside and talked to our farmer franchises, and he felt really happy about this low cost processing. And then he took my number and interacted with me. And in about 2 months' time, he got convinced to provide the loan under the CGT SME, which is a central government scheme where this kind of small ticket size loan, you don't need to take any guarantee. That is credit guarantee trust scheme by the central government, wherein central government will give the guarantee for 75% of the loan. So he has contacted the RBI and signed up for this CGT SME scheme, and he gave an agreement to us to lend to 3,000 number of farmer franchises over the next 3 years. So that was the major bottleneck that we solved, and that was the major breakthrough that happened with us. Because of that, we started disbursing the loans under CGT SME scheme, and our farmer franchises started, because the interest rate is also very low. And during the same period, when I interacted with NBFCs, they were ready to give the loans, but the interest rate portion is not convenient with our farmer franchises, because they were charging about 23-24%. And that is an NBFC cannot avoid that because of various other reasons. And because of that, our farmers did not get convinced for the NBFC part of the loan. So that's how, when first Gramina Bank, that is, it's called RRBs in India. So when that RRB first signed our program and they started disbursing the loans, so I started interacting with other RRBs also since one RRB signed up for this program, the others also followed. And other Gramina banks also started signing up this kind of a proposition with our food. So wherein here in this case, we are guaranteeing the 100% offtake of the processed material. And the transactions are being routed through the bank account of the farmer franchisee, and which is opened in the Gramina Bank. That's why the banks started feeling the comfort, and they started giving the loans. So that's how we solved our major bottleneck. And especially in March 2020, when this corona happened, and so many people from the cities who migrated for doing some kind of small job which pays them about $1,500 like that. So these people started coming back to their village, and they don't have anything to do in the village because not much of economic activity happening in the rural areas. So they started doing the farming practices, but with the very small landholding size, they can't earn the income that they get in the city job. So they wanted to do something. So for them, our proposition seemed to be the best one, and so many people started approaching us. And the government also saw that the best employment generation program is always the food processing sector. So on the policy side also, government started encouraging these low cost processing units. So from the ecosystem side, from the banking side, and also the policy side, we suddenly got huge support. So because of that, we scaled our innovation very fast in the last 1 year. So we were hardly 25 people in 2020 May, and today we disbursed loans to around 1,500 former franchisees. And out of that, about 700 former franchisees are in operations and producing a lot of material. So the bottlenecks, as far as the financial journey is concerned, uh, so the biggest problem in Indian setup is we are not able to manufacture the machinery that the demand, according to the demand. Because the existing manufacturing facilities are very high capex, and the people who are manufacturing this low cost equipment, they are very defragmented and very small. They don't have necessary infrastructure. So because of that, they are not able to do the manufacture the numbers that they wanted. So we wanted to set up the manufacturing unit ourselves. But
Bala,
yeah,
sorry to interrupt you, but just a time check. You in 2 minutes, if you can wind up. I think this has been very informative. But if you can in the next 2 minutes, if you can wind up, that'll allow time for questions and discussions.
yeah, sure. Yeah, so now we have solved this problem by starting our own manufacturing unit. Yeah, so the in yeah. And we have disbursed loans up to 1,500 people, and about 1,000 franchises are about to be running. And now we are covering about 12 crops already. And the future, yeah. So as I was telling, so uh, the processing done at former franchisee is only 50% done. So after that, we need to bring that material to the dispatch center, where there is a little bit of more processing required in terms of grading, sortex, and all that. So for that, we need to set up the infrastructure. For that, in India, we don't have any financial solutions for doing that, because that comes under infrastructure project, and we are supposed to give mortgage if we raise debt on our own books, and that we are not able to do. And the second one is we are increasing the manufacturing capacity to 500 machinery per month. So that requires a huge capex, and that also is a big problem. And the third one is the working capital that is provided as a part of the loan is very small. It's hardly $1,500. Which is not enough for the farmer franchisee. And there are some bold farmer franchisees, they are able to produce a lot of material, and they require a good amount of working capital. And in our banking system, that product is not able to sit. So because of that, these people are not getting enough working capital. And one more thing is, whenever we raise debt from other institutions, we need to provide FLDG, and that is also creating bottlenecks in terms of raising money from the NBFCs in India. So these are some of the challenges that we are facing as far as the finance journey is concerned. So I'm very thankful to share this journey with all of you guys. Yeah.
Thanks so much, Bala. This is very useful and informative. I wish we could continue, but I think this is provides a good executive summary of what you built. Two, three main messages that jumped out. The fact that decentralized small scale machinery deployment for farmer groups, which takes jobs back to the village, uh, fundamentally addresses in a way the low productivity in agriculture that we talk about, right? Near farm jobs are more important than concentrating urban areas in a way to create income generating opportunities. So that I think I found very, very interesting. In terms of your challenges, I guess that's something we will, financing challenges, we will dwell into as we get into the questions. Let's get into the second presentation, which is from Caspian, which is an established fund manager currently doing a agri-SME focused, early stage agri-SME focused fund. Saurabh and Emmanuel, I guess you want to share your screen yourself and jump into it now.
Sure, Aman. Thank you very much. Thank you, Bettina, Aman, and members of the SAFIN network for allowing us to present our learnings to the forum. And just want to check quickly that the presentation is visible, Aman?
Yes, I can see it. I hope everyone else can.
Sure. Thank you for giving this opportunity. And just by the way of introduction, I'm the group CFO at Caspian, and I have Mr. Emmanuel, who is the fund manager of the fifth fund with us, and we will be co-presenting. Just a quick slide on the background of Caspian. We are a 17 years old organization, primarily working in the early stage funding of the enterprises in the early stages. We one of the first funds in India which invested into the seed institutions in 2004 and followed up with an India growth capital. We have an NBFC which gives debt to the early stage enterprises, and which marked our entry into the food and agriculture sector. Subsequently launched an SME fund in which food and agriculture is one of the theses as part of the investment thesis. And I have already made 2 investments in the area of food and agriculture. And what we are going to talk about today is, of course, what we are very excited about is the fifth fund from the house, which is the Caspian Leaf Fund. And we are very excited about it because it gives us an opportunity to again reconnect with the early stage enterprises in the pre-series A, seed, and series A world, enterprises working into the agri-tech area. And it's very exciting space in India right now, and of course very challenging and demanding because while the capital in India has started becoming available to the growth stage companies, we are seeing quite a few of transactions funding once a company or enterprise reaches a certain scale. But the capital for early stage, once the entrepreneur has started, developed an idea and wants to start looking for its first funding, it is still quite difficult in the market right now. So that's the problem we are looking at solving in the ecosystem. And I'd like to invite my colleague Emmanuel to talk more about the sector and the specifics of the Leaf Fund.
Thank you, Saurabh. Can you go full screen if possible?
Sure.
Yeah, so I think I'll be quite brief in my presentation, considering we have a global audience and would get a better appreciation of what we're trying to do. So agricultural funding qualifies as priority sector, and banks have a mandate to lend to this space. In spite of all that, there still continues to be a very large gap in funding, both at the farmer finance level as well as at the enterprise level. And this is that gap that we are trying to bridge through both our debt vertical as well as the equity that we're trying to do to capitalize these companies. So broadly, I think Caspian debt emerged out of a recognition that debt funding is scarce to this sector. There was a lot of equity that flowed into this space. New businesses came up, but growth would have to come from working capital, where these new enterprises had no securities to offer, as Bala was saying, and therefore their growth was stunted. We, as coming from the equity side, understood businesses differently from a banker, and therefore we entered this space, and that's where Caspian debt is. The next slide, please, Saurav. Okay, so we have different mechanisms to secure ourselves against the downside risks, which a bank thinks can only be secured from assets like buildings and land. And we use guarantee structures. We actually evaluate companies like an equity investor in terms of the capability of the team, the size of the market, the kind of margins they have. And on that basis, we do funding to these institutions, quite a few of them still not profitable as well. So we have deployed over 60 million USD in the agri space itself in about 30 companies. And recently, over the last 1 year, we've also invested in companies where equity funders are not there. So they basically bootstrap businesses, but doing so well and maybe starved of equity like our food, because investors don't find them so attractive at that stage to invest into, but debt can give them also a growth opportunity. Through the SME Impact Fund, of course, we've done 2 deals, Origo and Ecozen. We're mentioning that basically because you'll understand the focus we have. We look at companies which have the connect to the farmers on the ground, really benefiting them, rather than looking at the tech or the farm to fork kind of supply chain companies is not where we look at, because there are many others who operate in that space. So more than 1,000 agri startups are there in India as of now, and under 100 are actually funded by equity investors. And that's the gap we see. And when we see those entrepreneurs like Bala who are waiting for equity funding, we realize that there's a need and an opportunity which may not be filled by others in the near future. And therefore, we came up with the idea of Caspian Leaf here. Next, Saurav, please. Okay, so the reason why we think we're good at this business is, and we worked it backwards, that the companies in which we put debt have grown phenomenally, successfully, and as they raised further rounds of capital, their valuations went up. So really, the returns from debt are not so great as compared to equity, but the gains that these enterprises have received from our debt funding have been great. And therefore, we think we understand this agri space much better than many other investors. And there are so many opportunities out there to invest. And therefore, we're getting into this space. Yeah. Next one, Saurav. Okay, so a few things about the fund, just a few theses. I think the presentation will come back to you so you can read at leisure. So we plan to make about 10 to 12 investments in this space into companies that have a strong connect with farmers. So that's basically going to be the fundamental basis of these. Otherwise, I think in terms of returns, in terms of scalability, they're not going to be different from the way other investors look at these. And we will be working across the value chain from inputs, from farm machinery to substitution of labor, to better resource utilization, right up to traceability and other factors. So each of these investments will be interlocked into the other to kind of across the value chain provide benefits to farmers. What we're trying to do is at the bottom of the screen, we would do many things, including business development, market linkage. So the history of the way Caspian has built enterprises from scratch to taking them to market is evidence for all to see in terms of the names that are there where Saurabh spoke. And we believe we can do that with agriculture also. And we will be very active investors rather than just putting money into businesses. Right, Saurabh? Okay, so sustainability will be a core of our thesis. I think those other LPs who have also committed to us have made are serious investors who believe in sustainability. They have a longer no-go list than the places we should. For example, BT cotton and hydroponics. Some of these we have been told that are not to be looked at. We'll be looking very much at on the ground farmer side. So upstream of production is what we will focus substantially, not fully, but substantially. And there'll be several dimensions, including infrastructure, reducing drudgery, replacing labor, ensuring traceability, and benefiting farmers. So that would be the thesis around which this fund is being built. On the bottom, you can see what we are saying about the investee companies, which any other fund would also say about a team, a scalable model, and professionally managed companies. And yeah, next one, please. Okay, so we believe that these three pillars will have an equal role in what we're trying to do of being sustainable, producing better yields through technologies, and building that infrastructure connecting to the market and thereby increase realizations to the farmer. So all these three would be equally focused in the fund. And we would be also tracking metrics along the sustainable development goals as we work on this fund. Yeah. Thank you. Next one. Okay, so just to showcase the several partners we have, as Aman was saying, Caspian has a reputation of its own in the market. It's been there for 15 years. Partners who start with us almost never go away. They stay with us. And on the right side, on my right, there's this market development partnerships that we have. So in the last 4 years, we've been working very closely with agri incubators, way beyond our business vertical. So we work very closely with many startups at several levels, sharing our knowledge, expertise, our market connects, helping build, irrespective of whether they're potential businesses or not. So we'll grow the who's who in the market in agri incubation and acceleration space we partner with. We invest our time and resources substantially in building these businesses. Yeah. Next, Saurabh. And I think, yeah, some of these names here, we had those logos and then we have the names here. So many others we work with, maybe around 20 to 25 developers of the ecosystem we partner with along the way. And these will give us, you know, that pipeline of companies. So we identify companies at a very early stage. The fund already has a very good pipeline of companies ready to take funding. They see the difference between us and a conventional funder. Yeah. So with that, I think I'll just stop. And there were questions about challenges that we're facing. Maybe Aman, if you want me to speak now, I could. Or if that's going to come in the Q&A, I'll wait for that. Yeah, thank you.
Sure. Yeah. Thanks so much. I think, and thanks for keeping time. You were on the dot in terms of taking the 15 minutes to complete the presentation. Thank you so much, and very comprehensively. Yeah, I think we can kick off the Q&A. Bettina, do you want to kind of do that, or or would you like me to?
No, I'm happy for you to do that, Aman, if you don't mind. It's also because I posed some questions myself, and so if I also manage, I feel like I'm monopolizing. So over to you.
Great. Thank you so much, Bettina.
Maybe you can start from those that have already been. A few have also come in the chat, so that people that have additional questions can also do that in the meantime.
Yes, and thanks for the people who've posed questions on the chat while we were speaking. I think it makes it very efficient. I think one of the points that you made, Bala, about COVID being a tailwind, I think that was interesting, and it kind of what we understood is that during COVID times, a lot of the urban workforce that was coming from the villages went back, and that decentralized processing machinery gave them an employment opportunity. So could you speak a little bit more about that and how that has actually turned out for you in terms of how the COVID related impact has turned out, and we can actually throw it open to the people on the call for other questions after that, I guess, because we can then kind of alternate between live questions asked and those put on the chat. But let me start with this one, Bettina, which you asked. Bala, over to you.
Yeah. Thanks, Aman. Thanks, Bettina, for the question. Yeah. So in India, generally, in the last 10-15 years, the trend is if the kid of a farmer, I mean, if the son or daughter of the farmer, if they complete, let us say, minimum 12th standard or any undergraduation, they are supposed to go to the nearby town and do some job other than agriculture, because agriculture is not that remunerative. So, and if any farmer's son or daughter is doing agriculture activities in the villages, they are considered somewhat low status symbol for their family. So the parents ask their kids to go and do something in the town or city, even for lesser salaries also. So for that reason, right after the +2 education or undergraduation education, like BTech, BCom, these kind of courses, all the young youth people. So all these people go to the nearby town or city and work for some small job. That income is not at all enough for them, but because of the society obligations, they will go and do the work. And also, there are no economic creation activities in the villages in India, because right from the agriculture, we just jump to the IT services sector, where a farmer's son becomes the software engineer, but not the small scale industry kind of activity they'll not take up. So because of that, due to the lack of employment generation activities in the villages, and due to the society obligations, and due to the non-remunerative practices in the agriculture, all the youth are going to the nearby cities and towns and settling for a meager paying job. And when Corona happened, most of these people lost their jobs, especially the people working in the hospitality sector, and people working in the manufacturing segment, people working as Uber, Ola drivers in the travel industry. Most of these people lost their jobs and they went back to their native place. And the people in construction sector, so most of them. So when they went back, since they can't keep quiet, and they have to do something for their livelihood, they started cultivating their own land, their parents' land, and their near relatives' land. So when they started cultivating, they understood that agriculture alone will not give enough remuneration for them. So they have to do something apart from agriculture. So for these kind of people, so many, I mean, more than 30 million, 40 million people return to native place, and they have to get some income generating economic activity other than agriculture. So for all these people, the lowest hanging fruit is the food processing sector, because agriculture and agriculture related activities can provide economic activity in the rural areas. So they understood this opportunity and they started searching. And because of the internet penetration across all the villages in India, so all these people started searching YouTube and all these channels for identifying low cost, low investment business opportunities. So most of these people found our food business opportunity, especially through YouTube, because we created so much of YouTube content in local languages, and this is easily accessible to the Indian youth. So all these people started approaching us, and we understood this opportunity, and we started aggressively promoting this low cost food processing activity, and most of them got convinced, and they have little savings that they have done while doing the job in nearby town or city. So with that money, these people started constructing the shed. And especially because of corona, even the government also understood that there is a lot of untapped economic activity generation and also employment generation activity in the rural areas in food processing sector. During the corona pandemic only, during April 2020, I have submitted a project report to the Ministry of Food Processing, how we can generate employment to at least 400,000 people by establishing 100,000 farmer franchises, that is 100,000 low cost processing units. And that report was read by the Joint Secretary of Ministry of Food Processing, and they immediately came up with this idea called formalization of micro food processing units scheme by allocating 10,000 crores of money for providing the loans to these people. And from the bankers side also, they have written recommendation letters to the bankers asking them to provide loans, lend them under the CGT SMA scheme. So that's how we got huge support from the government side, banking side, and also the ecosystem side. All the youth wanting to become entrepreneurs, and we rightly tapped this opportunity with both of our hands, and we have grown like anything. So
wonderful. Great. No, that was useful. I think let me maybe just open this up. We will come back to the questions on the chat, but let's give the audience an opportunity to come in, jump in with questions for either of the presenters. Does anyone want to jump in and ask? Please go ahead. Okay, let's go back.
Aman, sorry. Let me put someone on the spot if you don't mind. Pranjit asked a question for Caspian. Pranjit, do you want to just ask it verbally? Go ahead.
Thank you. I have a question for Bala too, so maybe I'll ask that as well. For Caspian, I thank you first for the presentation, very informative, and probably even after the meeting offline, we would like to connect because there's something I was hoping we can engage with. For Caspian, I was wondering, do you have a geographical focus for investment? In the country, any specific geography?
Yeah, so we are limited by our mandate to India. So we don't invest beyond, but Indian company could go beyond the borders. So many of these companies developing technologies and solutions would, as they grow, offer it to most of the developing countries, Africa, Southeast Asia. So there's good opportunities, but the registration and ownership has to be an Indian company. That's as per our law.
And within India, it is any state, right?
Anywhere in India, yeah, we are open
awesome.
To any.
Thank you. Another question for Caspian. I'm sorry, Aman and Bettina, please stop me. I had two questions more. Okay, thank you. Another question for Caspian is, do you have any experience of financing any farmer producer company or any form of farmer producer organization? Yeah,
so we do have. We have funded over the life of our debt fund about 6 to 7 farmer producer companies. As of today, we may have only 2 or 3 of them, but our experience is there in that space. And also just recently, we have produced a guidebook for lending to Fbos. We were commissioned by GIZ to do that. So in terms of knowledge we have, in terms of what we've done, it's small, but the capacity is there. We look at larger ticket sizes, and our loans are also a little expensive. That is why we pick up only a few businesses. For example, we funded one poultry producer company in Jharkhand, which ran into losses because of the prices taking a dip, and they had working capital issues. They were in losses. So we funded them just in time when they had to get revived. Similarly, I think, although this is unrelated, because of our experience with lending in Fbos and the knowledge we have, I'll be shortly joining NAPKisan as a director. I've been invited to, and NAPKisan does a lot of FPO lending. So in that way, it's not just our portfolio, but we facilitate lending by banks and others by building the right ecosystem and knowledge around that.
Can I come in on this? Sorry, thank you, Franjit, for asking a question that prompted a response that goes beyond this particular call. Emmanuel, you said you just produced at the request of GIZ this guidelines for lending to FBOs. I don't know whether this is something that can be shared, but it is a kind of document that can be shared. So many people on this call and beyond would love to see it.
It's a free to download. It's
okay. So please make sure that we know where it goes.
Yeah. Anyone who can use it, please do.
Wonderful. It's something that sort of we've been discussing also with other India-based and non-India-based partners in the network, how to really sort of contribute into strengthening the financial ecosystem around FPOs. The fact that Caspian is also sort of, linked to efforts within the banking sector to be more responsive to this particular type of clients is excellent. I think it's something that we would really be interested in following. I am also interested in making sure that a question that was posed to our food is not lost. So there was another question for Bala. About that I don't think was posed yet, the role that government credit guarantee played in sort of the expansion of your business model. Was this a transitional thing, or sort of was this necessary as a transitional support in the growth of the business model, or do you envision that because of the nature of the business model, this kind of de-risking contribution to the financial model around our food will continue being necessary? This is the kind of question that is, I think, really important for a network like ours, where you have concessional capital providers as well as investors and entrepreneurs, on the front line. So, a question for you, Bala. Thank you.
Yeah. Thanks, Bettina, for asking this question, because this is one of the most important questions. Actually, this scheme is there since so many years in Indian banking system, but they don't exercise this thing because they fear that the lender, the people who take the loan, they'll not repay because the central government is giving the guarantee. So they will take it, some kind of, they don't take it that seriously. So because of this apprehension, the banker is not giving the loan under this scheme. So in the last 1.5 to 2 years timeline, so there is pressure on the bankers side also to provide loans to these kind of people, small ticket loans under this scheme. So because of that, the bankers started giving the loan. But there is always a challenge because this number is limited. So if we want to scale up our food business concept, and if we want to take this up across India and reach out to all the villages and enable all the farmers to do the processing themselves, so a little more support is required. So this scheme itself cannot lend to all this requirement. And we are facing that kind of a problem actually now. To ramp up the production, machinery production activity, so we require certain investment, but the lenders are asking for a kind of bank guarantee kind of facility so that they can lend for lesser interest rate. so which we are not able to provide. So that is hampering our growth and reaching out to many number of farmers.
Thank you. I'd be interested in perhaps, some of the participants that may have suggestions about sort of, ways in which the scaling up of similar business models has been possible in other contexts to share, maybe offline, and maybe Aman, you yourself have also some thoughts about this, because I see this as being a critical issue to address, not just for our food, but in general for this type of business model to scale. So thank you for raising this. There was a question from Prasoon, so I'm going to put someone else on the spot right now for Caspian. Prasoon, are you able to unmute? I know you had some issues with your connection. Are you still there? Dr. Prasoon from Apraka.
Yeah, yes. Thank you, Bettina.
You had a question for Caspian. You want to raise it?
Yeah. I had a question because I know Emmanuel for a long time. So what actually do we found that, as Emmanuel said, that they are looking for the big ticket investments. Actually, in the process, what happened, even if you go by actually one of our report of Apraka, which we did along with NABARD, that the FPOs, which are successful FPOs in India, are all commercial FPOs, commercial crop, or commercial dairies, or commercial fisheries, or anything which is commercial. But 90% of the farmers in India are involved in the livelihood crops. So how the investment will come? See, they left with only the banks. The banking system, as all of you know, that banking system are not so efficient. Although I'm representing the banks in Asian region here, but still people say the banks are not efficient and investors are efficient. Now I can see that the investment have gone mostly to the commercial sector of agriculture, which is not bad, but at the same time, we are thinking about the smallholder farmers, those who are growing the livelihood crops. What will happen to them and how the equality can come? How the investor can take more risk to invest on this kind of FPOs, which are made of this smallholder, those who are growing the either rice or wheat or maybe maize or ragi or bajra. So this is really a big challenge for the whole country. So my question to Caspian is that how you think about dealing with this, even if you are not investing, what will be your suggestion to the bankers or the banking community in the country?
Thank you, Prasoon. I think the question may also be whether the type of financial actor that Caspian represents is best placed to actually address investments in FPOs that are focused on livelihood crops, or whether that is a best fit for other actors in the ecosystem. But I'll leave it to the colleagues from Caspian to answer, and then we wrap up as we are going to go a few minutes at a time.
Yeah, thanks for the question. And I think our answer to that is pretty straightforward, that only banks can offer the kind of rates which are affordable for farmers who are growing grains and other crops. And NBFCs, the interest rates would start anywhere from 15% or at best could go to 12%. So the affordability of those rates is a question. And I think the Indian banks would only do it by mandate or by being pressurized to do it. Several attempts are being made. The other trigger that they are trying is to offer guarantee structures, whereby guarantees can back the loans that the banks will take. We are preparing the ground. Basically, NBFCs like Samonati, NAB Kisan, Ananya, and Caspian in a small way are making these FPOs bankable so that later on they are able to access banking finance. Initially, the more commercial crops were being financed. Today, I think other crops are also being financed because the FPO basically is a trading intermediary. So if it is able to transact at decent margins which cover the cost of credit, it is possible to finance them. So it's a matter of both volumes and being able to negotiate good prices. That is happening, of course, not at a scale we would like to happen, but it's slowly building up and hopefully will happen. But Caspian, we realize our kind of debt is not for those who are working on 3 to 5% margins. They may not be able to afford, and the risks of taking a loan from us are also high.
Thank you for this. I feel like we have a big topic for, sort of a follow-up conversation there around sort of expanding the options for finance for investment into companies or FBOs that deal with crops or types of agricultural products and food products for which there isn't still a very well established commercial value chain. But for now, we have to wrap up. So I want to thank Aman, first of all, for the opportunity, for the idea, for facilitating outreach to Bala and Manuel, so the colleagues from Caspian and Our Food. I didn't know either Caspian or Our Food, and this has been a really interesting opportunity for me that I will, go back and do more learning about. Thank you for your willingness to share your experience, your wisdom, and for opening up some conversations that I hope we can take forward. If anyone is interested in following up with one or both of the speakers or Aman, of course, you can always reach out, you know where to find us. And with this, once again, thank you so much. And I wish you a great rest of the day.
Thank you. Thank you, Bettina. Thanks, everyone.
Bye. Bye-bye.
Thank you.